Welcome back to another video, everybody. I have a very important update for all of you this evening. We had an incredibly volatile day in markets and a very important event that happened this afternoon, and that was the 20-year Treasury auction. Now, a lot of people are going to be using this and kind of blowing this situation out of proportion here. And I'm going to break this situation down in the simplest way that I possibly can for all of you so that you guys can get a better understanding of exactly what's happening in the markets right now and why the markets are selling off the way that they are. But what I want you guys to remember here is that context is very key. When we take a look at this bond auction and we are looking at this new tax bill that's going to potentially get pushed through, and we also had Moody's downgrading the United States credit rating on Friday. When we think about things from that perspective and with that information, a lot of things start to make a lot more sense, but we're going to cover that throughout this video as well, and how this is going to affect a lot of your favorite tickers, stocks as well. So before we get into all of that information, guys, if you guys do enjoy the information and analysis I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, make sure you're subscribed and turn on notifications so you're notified every time these videos do end up getting posted live. And as always, big shout out to all of the members of my private trading and investing community, Less Trades, More Profits. You guys have been absolutely crushing it as usual here. Again, if you guys want to hop in there and join us and take advantage of the best sale that I am ever going to offer, it is 50% off your first 2 months with code MAY with the link down below. Again, it comes out to $1 a day. You guys kind of know the point of what you guys get in there. I've said it a lot, but all the full-length educational courses, the daily private live streams, the pre-market plans, the full watch list of stocks and cryptos that are about to explode before they do, the macro research reports, the single stock research reports, the weekly market research reports. Again, guys, it's very highly reviewed for a reason. If you guys want to hop in there, we'd love to have you and get you guys to be able to take full advantage of everything the market has to offer. But let's get into everything here and talk about this bond auction first, and then kind of relay it back to the big picture here. So, U.S. Treasury auctions off $16 billion of 20-year bonds at a high yield of 5.047%. So there's a lot of different data points here: bid to cover, a tail, direct bidders, indirect bidders, dealers. And what you have to think about here is that a lot of individuals are going to be looking at the bid to cover or looking at the tail that we had and just looking at that at face value. When in reality, what you have to do is compare them to these 6-month averages, which this article does a very good job of right here, which is why we have it pulled up. So just to give you guys a little bit of an understanding here, I'm not going to break down completely in depth everything here about these treasury auctions in the bond market. But again, a price tail shows how much variation there was among the buyers in an auction. It's the gap between the average price and the cutoff price, which is the lowest price that got a bond in the auction. A large price tail, this is the important part, means that the buyers who barely got the bonds paid much less than others. This is not a good sign because it suggests the demand for bonds was low. So looking at these price tails and also bid to cover, it is a measure of demand. So remember, if you think about the normal supply and demand elements in any given market, well, when there is higher demand, prices can go up, and bond prices and bond yields are inversely correlated. So if you were to see more demand for these treasuries, you would then see lower yields, which is the opposite of what we saw in today's auction here. We saw a 1.2 basis point tail versus the 6-month average of negative 0.4 basis points here. And then also thinking about bid to cover, just a very quick definition for everybody. Again, it is another measure of demand here. The bid to cover ratio is the dollar amount of bids received in a treasury security auction versus the amount sold. The bid to cover ratio is an indicator of the demand for treasury securities. A high ratio is an indication of strong demand. But what did we see today? Well, we saw a bid to cover of 2.46 versus the 6-month average of 2.57%. So what you have to think about here is that there is lower demand right now in the open market for these treasury securities at auction. Now, why might that may be? Well, we just saw that Moody's downgrade on Friday, which is definitely spooking some investors, especially in the bond market. And in addition, we also have this new proposed tax bill that the Trump administration is trying to push through, which is going to further increase U.S. debt. Now, the key part of that, for those of you guys that may not be kind of making that connection here, is that if the United States is going into more debt, they're going to then have to, or one of the ways to do this is to issue more bonds, which is going to increase the supply in the treasury market, which is going to further drive up yields. So if you're an investor and you think that the overall yields are going to be higher in the future than they are right now, well, why go out in the open market and buy bonds now when you can lock in a higher yield in the future? But just thinking about this from almost a behavioral finance or psychological perspective here, if you have that Moody's downgrade and then you also have this new tax bill that could significantly increase the amount of debt that the government is going to be in, well, again, that is going to lead to a lot of these investors being a little bit more cautious heading into these bond auctions when they could just wait to buy these bonds at higher interest rates in the future. Now, there was an interesting silver lining from this auction here that I do want to touch on as well, that I think a lot of people are missing, and it has to do with the flow of money around the world. As we all know, and something that we've talked about in these videos a lot over the last couple of months here, is that a lot of the foreign money that has been concentrated in the US markets, whether it be in stocks or in bonds, which again has gotten to some of the highest historical levels ever, has left the United States markets. That's why you've seen some of these emerging markets moving to the upside. The dollar has been weakening, and some of these other foreign currencies are moving up versus the dollar. But what we saw today was that these indirects, these international buyers, were 70.7% of this auction here versus the 6-month average of 67.2%. So again, you are seeing some of this foreign money coming back into the United States markets at above average levels, which is interesting to see. And then because of this auction today that is spooking markets and sending, as you guys can see here, bond yields across the board higher, because of this lack of demand, we can see that the 10-year is at around 4.585 at the current time that I'm recording this. This also sent U.S. equity markets a lot lower. In the short term here, again, we have about an hour and a half before the market closes. Investors could start coming back in and buying this up as they realize, again, this was not a great bond auction, but it really wasn't the worst one in the world here. Again, we saw a very, very significant drop on ES here from these highs to the lows of about 91 points there, which is a very, very significant move. Now let's get into some of these individual tickers here. We're going to start with some of these AI names, and by looking at the charts here, again, Nvda, I've been talking about this for a while. Again, Nvda loves to give me that perfect A+ setup every single time that it's about to go into earnings. You can't touch it though. Again, earnings are always kind of that 50-50 coin flip. Implied volatility shoots through the roof, so options get very, very expensive. You're not getting a lot for what you buy. But again, Nvda does have earnings coming up on May 28th, and we're going to get a lot better insight into kind of where Nvda is obviously as a business from their financials here, but we're also going to hear a lot of guidance from the company as well, and I think their comments on China are going to be very, very important. Last night, Nvidia CEO Jensen Huang said that U.S. chip export controls are a failure and warned that the restrictions are doing more damage to American business than to China. Huang said in a news conference at Computex, an artificial intelligence trade show in Taiwan, that the policies have cut the AI chips leader's China market share from 95% to 50% and motivated Beijing to make its own chips faster. One of the arguments here that a lot of people have had with allowing Nvidia to sell kind of some of their lower powered chips to Chinese businesses is that it doesn't create as high of an incentive for a lot of these Chinese businesses to go out and create their own AI chips, because they could just use Nvidia's, and that frees up Nvidia in the US markets to continue innovating at a more rapid pace than these Chinese businesses. But now that we have some of these increased controls here, a lot of these new Chinese businesses are saying, well, we might as well do this ourselves, which again will be interesting to hear a lot more from Jensen Huang on their earnings report. And then also taking a look at AMD here. AMD, again, very solid chart setup here. We have it kind of converging right into that daily 10 exponential moving average. Again, this wouldn't be one that I would be looking for to take a short-term trade setup to the upside, just because of the fact that it is consolidating right under this daily 200 exponential moving average, which we did come up and reject on Wednesday, May 14th. So I would give this one a little bit more time. But remember, for those of you guys that know, I own AMD at $11.39. I'm not really looking to do anything with this position anytime soon. I've already made my basis very, very negative on this one. So sitting at a very solid risk-free position right now. So gonna continue holding this one. And again, thinking about the news that AMD has received, AMD aims to kick rival Intel while down. On Wednesday, they introduced its latest processors for AI-powered personal computers and workstations at the Computex trade show, the same one that Nvda was presenting at with Jensen Huang. AMD is looking to take PC market share from struggling rival Intel. AMD stock and Intel both rose in early trading, and this is coming off of some other really positive news that AMD has received recently. Again, this $10 billion collaboration to advance global AI with Humane, and also this announcement of a $6 billion share buyback. And again, we also saw this week the selling of the manufacturing side of ZT Systems business, which AMD had recently acquired for $5 billion. I believe they're selling that manufacturing business for about $3 billion. It's either $2 or $3 billion there, but just correct me if I'm wrong down below in the comments, which again kind of frees them up with a little bit more capital in order to perform this share buyback, which is definitely a good thing, while also kind of maintaining and continuing to keep that intellectual property from ZT Systems, which is most likely what they wanted in the first place. And then moving on to another one of these names that has been very successful for retail investors over the years, and that is Tesla. Now, this is, in my opinion right now, an incredibly bullish looking chart setup. This is one that I'm going to be paying very, very close attention to for a short-term position over the next couple of weeks here. Again, if we can continue this period of consolidation that we're seeing on Tesla right now, maybe tighten up a little bit. If we're able to break above this 355 area, we could start moving up very aggressively, very fast. But again, that is all going to come down to what this overall market is going to do, how the market reacts to this treasury auction here, and also this new tax plan that the Trump administration is looking to push through, as well as kind of that usual business there of all of these new trade deals. But today, we did also see that Dan Ives says Tesla's entering a golden era with a $600 stock price target in sight. That would be really awesome here. Again, if we are able to see that big move on Tesla here, we see that continued push to the upside, that would be a very, very solid move for all Tesla investors. And we also just heard yesterday that Elon Musk is also fully planning to remain at the helm of Tesla here as CEO for the next 5 years. Granted, he also said that that wouldn't happen if he died, but that's just a little bit of Elon Musk humor right there. But again, Tesla is looking very, very solid right now. And then moving on here to another retail favorite, and that is Palantir. Again, this one is starting to slip a little bit here and could easily, in my view, invalidate below this blue line here, this 10 exponential moving average. I was looking at this for a potential short-term setup to the upside, but again, that treasury auction today did shake things up a lot. Again, for those of you guys that know the system, we never broke above our key levels of interest, so there was no trade taken on this one. Again, though, I think Palantir, an unbelievable company, really solid fundamentals, continues to grow their business as a whole, but the valuation that it is currently commanding in the marketplace is just too aggressive for me to really say that this is a screaming buy right next to these all-time highs here. Now, with that being said, speaking about these new partnerships, we did recently receive news that SAP National Security Services has collaborated with Palantir Technologies to provide the public sector access to artificial intelligence-driven systems here. So the collaboration built around RISE with SAP, Palantir Foundry, and Palantir Artificial Intelligence Platform, or AIP, will break down data silos and create a trusted, harmonized data foundation within their entire enterprise, allowing real-world collaboration between humans and AI. So again, very, very solid Palantir partnership coming down the pipeline. Again, I say this before, I've said it again, it's almost every single week that Palantir just proves to us time and time again that they are going to continue to expand their business. It's just that valuation right now out in the marketplace is just a little bit too aggressive. And then thinking about what we have going into the rest of this week as we get into this long weekend, guys, there really isn't a whole lot of economic data. We did see a decent amount of Fed speakers earlier on this week, and we do have Jerome Powell speaking on Sunday, but that is a commencement address, and there is not going to be any new information in terms of monetary policy being released. But again, tomorrow at 9:45 a.m., we are going to have U.S. services and manufacturing PMI, along with existing home sales at 10 a.m., and then new home sales on Friday. With yields continuing to move up, I think a lot of people are going to start looking more into the housing data to really get a good gauge of what is happening in the housing market across the United States. What is the volume of sales? How are these prices? Are the prices starting to move down? How aggressively are they starting to move down? And that is going to be a real indication of things to come. But just looking at this market here from kind of a larger perspective, all we have done is gotten that retest that we have been talking about over the last couple of days here. Again, in order for this market to continue moving higher from this initial burst that we saw after this period of consolidation before that China trade talk development that we saw 2 weeks ago, we are going to need to see even more positive news. That auction today was definitely not positive news. The Moody's downgrade on Friday, no matter what your opinions are on it, was definitely not positive news. So we are going to need to see something positive come out in the near future, which I do think that is going to be more developments with these trade talks, potentially some resolution with these global conflicts. But what we really need to see out of this administration is very similar to what we were talking about yesterday, and it's a further emphasis on this growth initiative. Because if they are going to come out and tell the market that they are planning on increasing the levels of United States debt, well, you better have a way to make sure that you can tell the overall global market that you're going to be able to generate significant amounts of revenues. And again, you don't want that to come from them just issuing even more debt. You want that to come from the increased tax revenues from increased economic growth. So that is going to wrap up this video, guys. If you guys did enjoy the information and analysis that I provided for you guys in this one, make sure you go down and hit that like button. Costs you nothing to do it, but helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, make sure you're subscribed, turn on notifications so you're notified every time these videos go live. But until next time, guys, I will see you. Peace.